folks, Dan Frio here, the rate update. Today is April 19th, 2021. Not a good day in the stock market, but not a bad day for mortgages. So don't go away, we're going to talk about rates next. Okay, the focus I want to have today is things that we have a lot of clients doing. Okay, that's a generic title there. But we have a lot of people that are calling us that bought their house 2-3 years ago. They're like, my rate's not bad, but I have PMI. Okay, PMI occurs when you don't put down 20% when you're buying a house, or you get an FHA loan. So it doesn't matter on an FHA loan, you could put down 50% as a down payment and you still have what's called PMI. So a lot of clients, because of the rise in the value of the properties, they're calling us saying, what can happen, or what can we do and eliminate our PMI? So that's one of the areas I want to talk to you about. What we're doing with a lot of clients is we're either doing one of two things. We're either reducing their payments pretty big when they're dropping their PMI, or we're keeping the same payment and reducing their term. So I'm going to show you at the end of this where our 15-year term rates are right now. So, but what's happening today in the market? Well, the stock market didn't do very well today because a lot of the information coming out that's hitting Wall Street is, with the Biden administration, they're looking to pay for all the money that's being issued. And how are they going to do that? They're going to raise taxes on individuals as well as corporations. And now corporations are saying, that's going to take a bite out of our earnings, which then what happens? It takes a bite out of their stock prices. So we've seen stocks drop some today. But in the mortgage-backed securities market, we were at zero almost all day long, as you could see through here. But all of a sudden it took a turn. We just went back to zero. So that's where we're at right now. There's no economic news that came out today. So right now, here's where we're at. We're at zero on the MBSs. What is an MBS? Well, MBS is a mortgage-backed security that's a bond that trades on Wall Street that is the biggest component of your mortgage rate. Okay, that's why we focus on this, and that's why people follow me on a daily basis. So what this number represents is what's going on with the price of the bond, not the rate, the price of the bond. And as all my followers know, that I educate on here, is when the price goes up, what happens to rates? Rates come down. And when the price goes down, rates go up. So there's what's called an inverse relationship on the price and the yield of this bond. Okay, so right here we're at zero. So what happened? Nothing happened today. Well, you'll see throughout the whole day there was some ups and downs, and there was pretty dramatic up and downs at some point, but we basically closed the day at zero, which is awesome. And let me show you some technicals that I'm following right now and what I expect to happen within this week. Okay, so we follow this chart right here, and this is what's going on in the last quarter. We have lines that go across here, and I'll explain those real quick. I'm not going to teach you Economics 101 or Charting 101, but the line right there, the line right here, and the line down at the bottom, these are what we call Fibonacci levels. These are resistance levels. Think of them as bumpers on when you take your kids bowling. You don't let them just throw a bowling ball at the age of 5 because everything will be a gutter ball. You put bumpers up so they go boing, 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 and they go down and eventually settle somewhere. Well, that's basically what Fibonacci levels do. They're supposed to be technicals in place that are resistance levels, and things should bounce off of that. Well, as we see in the last quarter, we went from here and we blew past all the Fibonacci levels all the way down to here. So I kind of I keep these in play, but there's other technicals that you can follow. You can follow a 25, a 50, and 100-day moving average. That's what DMA stands for. So we're right here. The brown line right here is the 25-day moving average. The black line here is the 50-day, and the purple line right here is the 100-day moving average. We've had a nice recovery within the last few weeks. Okay, so what I was saying back in here, and you feel free to check any of my videos back on these dates, May 22nd through May 29th. I was saying, you know what, I'm hoping, or I'm anticipating us getting above this Fibonacci level right here, and then from there we have these other areas as resistance levels, which is cool. So follow me on this one. Right now, when we broke past this Fibonacci level, then the 25-day moving average came into play. Now look at it. It's pretty cool how we hit it here, we hit it here, we hit it here, we hit it here. So that is telling me that line is substantiated because it is holding the patterns there. Now, let's throw into the next thing up is we have the 50-day moving average. So let's clean up this chart and look at where the 50-day moving average is taking us. So we see right here, if you extend this 50-day moving average out on its pattern, which it all of a sudden it flattened out, but let's say it didn't flatten out. It should be, the trajectory should be here, okay? Where we've been for the last, basically the last 2 weeks is basically, if you charted this out, you'd be about right there. And I took this level here, down here, this level here, and this level here and made a line. Okay, where's that put us? If you look at it, it puts us right there. Where are we trading? Right there. And if you go back to my Friday video and Thursday video, I said we should be hitting about a 103.4, and we're right there. Okay, so that's where we should be trading right now. So I don't really think that rates are going to get any better. And the good news is I don't see them getting any worse. Today, there was no economic events out on the economic calendar. That's what's happening this week. The only thing that we really have going for us is the 20-year bond auction on Wednesday. Usually the 10-year bond auction is where it kind of throws the markets for a loop. And then we have Thursday, we have continued jobless claims, initial jobless claims, where we were last week. There's nothing here that's indicating that this thing should be a surprise to anybody. And then new home sales come out on Friday. That'll give us the strength of the housing market. The tough thing about this is inventories are so low that this number is usually, I'm not really taking this number really seriously right now because of the inventories are so low. Now let's get on to what happened throughout the day. We'll click that and see what I said. We plummeted. And then we came back, and then so it's been bouncing all over the place. Okay, so that's basically where we are. I'm sorry, we started up real well, came back down, and then we've been balancing. But if you look at it, there's really no movement in today, and you can see that here. We went from, when you logged in, we were -2, then we went to 0, now we're up 2. The nice thing is we're coming at the end of the day. We have huge green candlesticks. This means, or is telling me that there's more buyers of the bond than sellers, and this is a big move here. So that is great news. And as long as this can transpose over till tomorrow, we should have some good news on the mortgage rate front there. And again, this China rate decision, that shouldn't throw us at all any monkey wrenches. If you check all my social medias, that we just posted this just a little bit ago, gives you some information on what's going on in the housing market and the mortgage market. But what I wanted to show you guys today is where 15-year rates are. Right now, I plugged in some data up through this area here. It's a $200,000 loan on a $500,000 property. The person is only doing a rate and term refinance. You have multiple options here, and this is where I want you guys to kind of focus in on some things. You can get a rate at 1.99. So you're like, well, Dan, you told us on Friday your rate's like 2.5 or 2.625 or whatever. Yes, that's paying basically no points or discount points or anything. If you want to pay some fees, you can get a rate down to 1.99%. Okay, it depends on the factors up through here. It could cost you 1, 2, 3 points. A point is 1%. And it's that percentage of the loan amount. So let's say, for example, right now in this scenario, 1.99 rate would be that this client would have to pay 3 points. 3% of a $200,000 loan, because this is a $200,000 loan, is $6,000 in points. Some people might elect to do that. Others won't. So I ran these numbers. And if you're going to be in the house the whole duration of time, meaning 15 years or more, this will pan out for you. This will pan out financially for you. You might have to take a bite up front of the $6,000, but over the life of the loan, it's going to save you, in essence, about $70 to $75 a month. After about 8 years, you recoup this cost. So everything farther and above that is pure savings. So let me recap it. A $200,000 loan in this instance, on a $500,000 property, on a 15-year term, is you can get a rate at 1.99% with 3 points. And again, to find out what exactly your rate would be, is you'd have to call us. And I just I wasn't posting rates today. I didn't get them yet. Rates are basically stagnant for when there were yet on Friday because, again, guys, we had a 0 MBS. But let me do this. If you hold on 1 second, I'll pull up Friday's closing numbers because they won't be any different than where they are right now. Because the MBSs are at 0, I'm just going to go over where rates were on Friday because there's no changes. So the 1 day delta means 1 day change. All these will be zero because there was no change. But today's 30-year conforming, jumbo, FHA, and VA rates are thus. 30-year conforming, 3.16. 30-year jumbo, 317. 30-year FHA, 318. 30-year VA, 276. Okay, the 15-year, as I showed you can get down to 1.99%. Rates are going down. You can see from here, a 1 day delta, a 7 day delta, and a 4 week delta. Delta means change. The parentheses in these areas here mean decrease or less than. So it means 3.15 dropped 4 basis points since the previous day. 4 basis points equals 0.04. Okay. So this would be 0.04. This actually 10 basis points would be 0.1. Okay, so I hope you follow me on that one. If you track the trend, last year at this time we were right around 3.6 to 3.75 most likely, and we're still down below those levels from a year ago. Again, 3.1. So we're down in the 3.1 range, 3.2 range, where last year we were at about 3.6 to 3.75. You go further back and you're talking the rates were in the 4s, the mid 4s. 2-3 years back, the rates were in the high 4s. So depending on when you closed, it might make sense for you to refinance right now. But again, what a lot of people are doing, if you have PMI on your loan, please give us a call, see where rates are. If you get a lower rate and eliminate your PMI, you can probably switch to a 5 or 10 year shorter term and pay off your loan in the same amount of time with the same amount of payment. So that's it for today on that. All I ask you guys to do is please do me a favor. Give me a thumbs up on the video, subscribe down below, and hit the bell. Every time I post a video, you get an alert. And what I ask people to do is, if you need my help, please ask us for some consultation. How do you get a hold of us? Well, email me a copy of your mortgage statement. What I can do with that is I can analyze it and say, okay, here's your rate, here's your PMI. It gives me your escrow numbers. It gives me all the data about your particular loan that you're in. I'll run an analyzer that we have here, and I'll send that back to you. No hard sales. It's basically, here's your current numbers, here's the numbers or where they would be if you were to refinance. Now it's up to you. The ball's in your court. Let me know if you'd like to continue. If you're already in the process, please give us a call. Why? We might be able to get you a lower rate or lower fees. And it's crazy how a lot of people don't realize how much they're paying when they're refinancing. A lot of times people are just, they look at the rate, they get wowed over the rate. I get it. And they kind of blind their eyes to everything else. I'll analyze all that for you. Half the time I might come back and say, you know what they're offering you is fantastic. Take it. God bless you. Move forward. The other half of the time, or probably 75% of the time, I'm giving you a lower rate, lower fees, or lower rate and fees. And then why would you go anywhere else? How do you get a hold of us? I'm going to give you that information here in a second. But if you're in a forbearance, that's the bing, bing, bing words. Please don't put your head in the sand. Please call us and at least give us your thoughts on where you are with a forbearance. And let us give you our educational ideas or assumptions, or at least the feedback on what you're being offered, if that makes sense or not. It doesn't cost you anything. And then the only thing they might be offering you a fantastic deal, or we might be able to come up with plan B that might save you a ton of money. So that's what I ask you to do. How do you get a hold of us and how do you find out more? Well, go check me out on YouTube. Go to my YouTube channel and it's right here. The Rate Update with Dan Frio. There's over 800 videos. Thanks to you guys, we hit 13,000 subscribers on Friday. So we're over 13,000 subscribers now. But if you want to just go to my website, here's what you do. Go to therateupdate.com. Right here is the way to do it. You click here. You can do this via desktop now and or by your mobile phone. Don't even need to use this button if you don't want to. Just click here. It'll route you to the application. Okay, that's the best way to do this. You'll be able to do your disclosures online, follow and track your mortgage through the whole process from start to finish, the funding. If you're just like, I have a bunch of questions, I just gotta route through this scenario. I'm looking to buy a house, I don't know a lot of stuff. Click here. It's basically gonna ask you about 14 different questions. Based on the answers to those questions, it'll help us determine the best program for you. This is the spot to pick if you're looking to refinance. Now, if you wanna call us, that's awesome. Give us a call at 844-775-LOAN. That's 844-775-5626. Or it's at night, you finally get home, you're watching this, and it's like, ah, man, he's closed. What can I do? Well, just scroll up above and click 15, 30, or 60-minute consultations. You'll click it. It'll open the calendar. It'll find days and times available that we have. You click it, pick, and then put in your information. We'll get an alert. You'll get an alert. We'll reach out to you the day and time of your preference. We can either do it via phone call or via Zoom. So that is it for today, guys. I greatly appreciate you watching. God bless, and we hope to hear from you soon. Take care. Bye-bye.